Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on the financial performance of companies as at June 2021. Companies listed on the Nigerian Stock Exchange, NGX, have been releasing earnings results for the first half of the year. As the earnings season winds up, we thought to review some of the half-year and first quarter financial performance of some quoted companies as at 30th June 2021. Earnings season is the period when publicly traded companies release their most recent financial results. Publicly quoted companies are mandated to publish details of their earnings or financial performance quarterly because these companies are available for anyone to invest in. Access to published financial results enable investors to make investment decisions which influence the direction of the stock market. Before going into the analysis, please note that H1 2021 means the first 6 months of 2021, January to June, while Q1 2022 means the last 3 months, April to June. Year-on-year means comparing the period this year to the corresponding period last year. For instance, comparing January to June 2021 to January to June 2020. We focus on the following sectors. 1. Telecommunications sector. The telecommunications sector recorded an impressive financial performance across the two quoted companies on the NGX, MTN Nigeria and Airtel Africa. This is despite a drop in the number of active mobile subscribers due to the enforcement of linkage of SIM cards to national identity numbers. The average revenue per user, which is the matrix that measures the amount spent per individual, grew year-on-year, implying that Nigerians on the average spent more on communications, especially voice and data. As a result, MTN's H1 2021 revenue and PAT grew by 24% and 50% year-on-year to 791 billion naira and 142 billion naira respectively. MTN declared an interim dividend of 4 naira 55 kobo per share. Similarly, Airtel Africa's Q1 2021, April to June, revenue and PAT rose by 33% and 149% to $1.1 billion and $142 million respectively. We expect a stronger growth rate in this sector for the rest of the year as users sustain spend on voice and data, as well as telcos intensify efforts to increase mobile lines linked to NIN. 2. Cement sector. The cement sector, which forms the largest part of the industrial goods sector on the NGX, showed impressive performance across the three listed companies, Dangote Cement, Lafarge Africa, and Boa Cement. The strong growth in this sector in H1 2021 can be linked to the resumption of construction activities post-COVID lockdown, which spurred demand. This can further be buttressed by the 11.2% year-on-year Q1 2021 growth in the cement sector. Dangote Cement's H1 2021 revenue rose by 44.8% year-on-year to 691 billion naira, and PAT grew by 51.9% to 191 billion naira. Similarly, Lafarge Africa's H1 2021 revenue improved by 29.4% year-on-year to 145 billion naira, and PAT grew by 25.7% to 28 billion naira. Also, Boa Cement recorded a 22.7% and 24.6% year-on-year growth in revenue and PAT respectively in H1 2021. We expect this positive momentum to be sustained barring any major lockdown that halts construction activities as the third wave of the COVID-19 pandemic intensifies. 3. Consumer goods sector. The fast-moving consumer goods sector recorded largely positive financial performance due to the inelastic demand for their products. That is, when consumers' demand for a product does not significantly change despite an increase in price. Nestle Nigeria recorded a strong growth of 22% year-on-year in revenue, to 171 billion naira in H1 2021. However, PAT declined marginally by 0.4% to 22 billion naira. Flour Mills of Nigeria recorded a positive performance in both revenue and PAT in Q1 2022, with a growth rate of 51.2% and 9.6% respectively. Flour Mills declared a final dividend of 1.65 kobo per share. Honeywell Flour posted 25% and 233% year-on-year growth respectively in revenue and PAT in Q1 2022. However, UACN's H1 2021 revenue printed at 46 billion naira with a year-on-year growth of 27%, but PAT dipped significantly by 34% to 763 million naira. We anticipate a mild slowdown in demand due to high inflation rates that negatively impacts the purchasing power of consumers' wallets. We still await the half-year earnings of the major banks. While investment in stocks may not guarantee capital preservation, it can offer a higher return than fixed income. We recommend stocks with solid fundamentals and consistent dividend payments. You can allocate a portion of your portfolio to stocks based on your risk appetite and your age. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.